Right, thank you, Courtney, and welcome everyone to our webinar with Angel Oak, Innovative Solutions for Underserved Borrowers. We first want to thank Angel Oak again and again and again for always being here for FAMP. Great sponsorship through our last few years of convention, always at every trade show and always there when we need you, and willing to participate in webinars like this to get out great information that we really need today in this very challenging environment and market. So I'm Linda Knowlton, your FAMP immediate past president, and I'd like to welcome John and Jerry. And I'm going to go ahead and read John and both of your bios. So John Jimenod is the Regional VP Sales at Angel Oak Mortgage Solutions. He is an expert and a reliable consultant in supporting brokers and correspondents. He has spent over a decade focusing on the non-QM lending space, and as he puts it, it's all I know and love. John has an impressive, diverse background ranging from retail and e-commerce to marketing and business development. The majority of his experience has been in the wholesale lending space. His favorite thing about Angel Oak is our ability to communicate through all channels of the business, from sales to operations to marketing. And then we have Jerry Caldwell, who is new to us as far as on a webinar. He is a senior account executive that you can trust as an expert in the non-QM arena. We would like for you to get to know him even better, and today is the day. Jerry is from Tampa, Florida, and has a decade in the real estate and the non-QM space. He loves that we have that Angel Oak has the ability to offer a product that helps borrowers obtain a loan that they would not be able to get anywhere else. The service and people at Angel Oak are what truly separates us from our competitors. I want to welcome both of you, and John, I'm going to let you take it away.
Yeah, thank you, Linda. Appreciate it. And it is a true partnership, FAMP and Angel Oak. So we do appreciate FAMP and everything you do, not just for your partners here, but for your customers too. Your everyone who's a partner of FAMP. But I'm lucky enough I get to work with people like Jerry and all of our other great account executives in Florida and in Texas. So Jerry's been with us over 7 years. I've been with Angel Oak over 9. Anyone you're going to work with in Florida, you're getting a seasoned, really knowledgeable account executive. So thank you, Jerry, for taking time out of your day to here and joining us. What we're going to cover here today is our debt service coverage ratio. We kind of internally call it our investor cash flow. Jerry's going to cover some of the highlights of the program. We're going to tell you what we want to see on a 1003, what we want to see on a credit report. We're going to show you we'll answer some questions. So feel free. This is interactive. Ask your questions along the way. If, usually sometimes participation's light, Jerry and I will go over some of the most commonly asked questions. And then we'll show you a pricing tool, because that's always a question everyone asks is, hey, how do you price these loans? And then really what I think is probably the most important part, we're going to show you our marketing portal, which, we talk about serving an underserved borrower. Well, Jerry probably will agree with me. Our marketing portal is probably one of the most underutilized tools out in the marketplace. And Angel Oak has done all this for you, and it doesn't cost you a thing. So without further ado, Jerry, let's go over some of the programs. Everything we're going to do here today is on our website, just so everyone knows that. We have a vast array of programs, but today we're specifically going to do a deep product dive into what we call our debt service loan program. So Jerry, take care of some of the highlights of the program.
Thank you, John. Extremely excited to be here with everybody this afternoon and to be able to cover the investor cash flow DSCR loan here at Angel Oak. It is one of our most popular programs that we offer here at Angel Oak. It's a loan that I call it a bulletproof loan due to the fact that it pretty much has an option for your investors that are looking to grow their portfolio and that are looking to expand. With the investor cash flow program, we do not require for the borrower to have had any sort of investment property experience. So that's something to always keep in mind. This can be for a first-time investor. It is also utilized quite a bit for the investors that are growing their portfolio, trying to expand, and being able to utilize the DSCR loan is one of the best ways to do so. So hopefully by the end of this webinar, you guys will all be experts in regards to the DSCR investor cash flow loan here at Angel Oak. The DSCR loan at Angel Oak goes up to $3 million as far as loan amount. The minimum loan amount that we can do for the DSCR loan is $100,000. Okay, all of the qualifications are based off of the property cash flow. We do not require any employment or any income information for this loan. The properties can be held in the name of an LLC. That is something that we see frequently more and more in today's market. We do not have a limit to the amount of properties that they can have. So if the borrower's got properties, we do not care about that. We don't have an actual DTI on this program, so they can have unlimited amount of properties. One thing about the DSCR loan here at Angel Oak is the borrower must own a primary residence. Okay, so we do require that they own a primary residence. We can do this loan as a purchase, cash out, rate of term refinance, and it is available also for a 30-year interest only option that we have for the loan. Loan amounts greater than $1.5 million will require a second appraisal. Pretty standard throughout the industry. We do allow non-warrantable condos on this program and are seeing quite a bit of those in today's market, especially here in the Florida area. We see quite a bit of those. We also offer condotels that are allowed in regards to the DSCR loan. So that is a huge perk that we're seeing, especially with the market compressions that we're seeing. We're seeing a lot of condotels that are available, and we can do so in the DSCR loan. This is a business purpose loan. So that means you are able to originate as a loan originator. You're able to originate this loan in several other states that we offer. You're able to do the loan without being licensed in those states. Some of the states, Colorado, Florida, Georgia, Indiana, Louisiana, New Mexico, Ohio, Oklahoma, PA, South Carolina, Washington and Wisconsin are all available for these DSCR loans to be originated if you are not licensed in those states. And if that is something that interests you, please make sure to reach out to your local account executive in order to go over. We do also offer this loan for non-permanent res, are also able to qualify for this loan.
Yeah, Jerry, so, great job. Like I said, Jerry knows this program like the back of his hand. Some of the recent enhancements are those condotels, right? And then, being a business purpose loan, allowing you to close in states maybe where you're not licensed. So Jerry touched on it briefly. So I'm going to talk a little bit about the 1003. And Jerry mentioned it earlier. It's pretty simple 1003. We don't want job information. We don't want income information, but we do want all the other parts of a 1003 completed. Your assets, your schedule of real estate, all your declarations, because 30% of the loans we close here at Angel Oak don't meet our guidelines. And how do we get past those guidelines? Most of that is because assets listed and knowing that this borrower, has a history of owning real estate. That might help a little bit. But one thing Jerry definitely touched on, this is also for that first time investor. So I find myself, maybe Jerry doesn't, I find myself always talking about this and almost leaning the conversation towards a seasoned investor, but want to make sure this is for that first time only. So Jerry, talk when you're doing a pre-qual, Jerry, talk about what you look for on the credit report as far as trade lines, seasoning of trade lines, and anything else that you do.
So as far as the credit report, the biggest thing that we're going to need for trade lines is we're going to need either 3 trade lines for 12 months or 2 trade lines for 24 months. It's as simple as that. Okay. As long as we have one or the other, then you are ready to proceed as far as the trade lines on the credit report. We do for the credit report purposes, we do go down to as little as 680 minimum FICO score. So that is something to keep in mind. We can go down to as low as 680 on the credit report. If you have any sort of bankruptcy, foreclosure, short sale, anything of that sort, we do require that those be seasoned for 48 months. So something to keep in mind as far as the credit report. And as long as they own a primary residence and we have the primary residence that we can clearly see that they own a primary residence, then that is all that we're really looking for, John, as far as the credit report goes.
Yeah, no, great, great. So a couple of questions here. Non-permanent resident aliens are not DACA. We don't do DACA, but you know, we're not going to touch on it today. But about a year ago, Jerry, we rolled out the foreign national program, and so a foreign national has the ability to close an investment property on how the property cash flows. So Jerry, what's our max LTV on that? Is it 70?
70% for the foreign national, it's max LTV.
Yeah, so we won't do DACA residents, we'll do non-permanent resident aliens, and we will do foreign nationals on this. And a couple of things we're going to ask is what kind of visa do they have, or if they're from one of those visa waiver partner countries, like we get a lot of Canada or the UK. So all we need from those borrowers would be a valid passport. So again, ask your account executive regarding that. But with all this geopolitical strife going on in this world today, I will throw out a couple of tidbits here. We are seeing more and more foreign nationals purchase real estate here. And I'll jump to a quick marketing point where you have large universities throughout the state of Florida. A lot of foreigners want to send their children here, and they are buying property for their child to live in and live here while they're attending any university or college. So anything else to add there, Jerry?
No, I mean, the foreign national program is very similar to the DSCR loan. They're both treated as investment properties. The biggest difference between the foreign national and the DSCR loan is, you know, we're, like I said, we are maxed to that 70% LTV, where DSCR can go as high as 80% LTV. And we do not require any credit score or any credit information for the foreign national, where we do in the DSCR loan. So, but once again, you know, we're here to cover the investor cash flow program. So get with your account executive in regards to the foreign national program, because it is a very popular loan that we are seeing quite a bit of in today's market.
Yeah, so Jerry, another question here, you know, political asylums, you know, there are a few countries that regardless, we're not going to lend from. I know Venezuela is one of them, Jerry. I don't know if there's anything else you want to add to that.
Yeah, we actually have that list that we can send to you. We can provide that for you, along with which are the political asylum countries that we are not able to do loans in. So just send an email to your account executive, and they'll gladly send you the information in regards to that. Like you mentioned, some countries we are able to do, like we're able to have the visa waiver countries like Canada, which we see a ton of Canadians here that are looking to do the foreign national loan. That's a perfect foreign national bar, just because all we're going to need is a valid passport in order to qualify them, and they're able to do the loan as simple as that.
And if you do even just a Google search for the OFAC list of countries that, you know, the U.S. won't do business with, those are primarily those countries that we will not lend to borrowers from that country. But a couple of things I did want to make sure that Jerry said is, you know, we don't require the old program we used to have for foreign national. We used to have to develop or create a credit score. This doesn't require a credit score for that foreign national borrower. So I think that's important. So Jerry, a couple of questions that, you know, we usually get. Do we allow delayed financing? I know we're seeing less and less of that because of the market rates going up, but talk about delayed financing.
We do. We allow delayed financing on the investor cash flow DSCR loan. With delayed financing, we're going to use the lesser of the two, which is either the purchase price or the appraisal value. We do need to source the purchase funds in order to do so. But, you know, just to give you a simple example, your borrower is up against time, decides to pay cash for a home in order to make sure that he gets the loan, and he wants to recoup his money, and he wants to turn around and do a delay financing loan with us, we're able to do so. There's no seasoning requirements, waiting period in order to do so. We see it a lot of times with hard money loans where they take a hard money loan in order to get the loan done, and they come right back and refinance with us in a delay financing option. And we are able to do so under the delay financing program. That is not as popular as it was when the market was booming and people were really trying to steal purchase contracts out there. But we still do see quite a bit of the delay financing throughout.
Yeah, Jerry, and I'm starting to see, an influx because we've had such great appreciation, not just here in Texas, but in Florida also, starting to see some investors take some cash out.
Absolutely.
And Jerry,
we can do this.
No, go ahead. I know where you're going.
We can do cash out up to 75% LTV. Okay. And we are, like you mentioned, John, that's a great point. We are seeing quite a bit of people that are not only just pulling cash out, but they're pulling it. A lot of the investors that pull the cash out are still growing on their portfolios. Yes, the interest rates are a little higher, but you got to keep in mind they're not going to stay that way. And they know that they can still get into the purchase market, and especially in the hot markets right now, they're able to grow their portfolios, and all they're going to do is turn around and refinance them down the road. So a lot of investors are pulling cash out to grow their portfolios. And a lot of people are also pulling cash out just to have as far as reserves and different things throughout. A lot of the credit card interest rates are through the roof right now. So, why not pull the cash out in order to be able to pay some of that debt off? I'm seeing a lot more and more of that, especially with a loan that requires no employment information and does not require, it has any sort of a DTI, and that's perfect. A loan pays for itself. It really truly does, and that's why a lot of people take advantage of the DSCR loans. Your realtors love this loan. Realtors are one of the number one DSCR borrowers that I see because they're constantly in the market and are looking to build off of that market. So just talking about and saying that you have this program available to one of your realtors is going to get you in the door. As far as being able to grow your business partner from offering this type of loan.
Yeah, Jerry, you touched on a couple of points that is that not a trade show, but it was at one of a larger lender had their national sales rally, and they had Barry Habib as a guest speaker there. And you almost have to take the mentality today and be a debt advisor, right? Be a debt advisor. Don't be, you can create your own little cash out refi boom. Jerry mentioned credit card debt. I think the average credit interest rate on a credit card right now is 25%. And I talked to someone the other day, Macy's is at 31.47%. I mean, that's crazy. Student loans are coming due again, right? So you have all this debt mounted up. There's over $1 trillion just in credit card debt, and there's 1.5 trillion coming in student loan debt, in addition to interest rates going there. So, you try and pivot and finish the rest of the year really looking for a good amount of cash out, because that's the other thing coming due. Holidays are coming, taxes are coming due. People, like Jerry said, people are just taking cash out because cash is king right now. So anyway, that's a great point, Jerry. Thank you for bringing that up. A couple other questions, Jerry, Jerry, talk a little bit about, the debt service coverage ratios that we allow.
So the debt service coverage, and this is why I say this is a bulletproof loan. So you do have the option of going to the 1-to-1 ratio, okay, which is the standard for the DSCR loan. A lot of times you ask yourself, how do we know this? How are we going to know if the DSCR is going to be able to positively cash flow, okay? And you won't until you order the 1007 and then get the market rent analysis on the appraisal. A lot of times you won't. But you can do your homework by just simply jumping on Zillow and checking the rent analysis, or a lot of times your realtors will have a really good idea just because they're in the market and they know the area, so they're able to have a better understanding as to what the DSCR comes in at. But it's really simple. If the DSCR comes in at 1-to-1 positive cash flow to whatever the PITI, and if there's associations and condos, payment is, then your loan is good to go. So for instance, if you have a $1,500 a month PITI payment, your market rent comes in at $1,900 a month, that loan has got a 1-to-1 ratio, over a 1-to-1 ratio, so you're able to proceed. We don't have any sort of restrictions with that. That is the standard that we see for the DSCR loan. Most of our loans do DSCR. Now, there are some areas in some of the larger loan amounts where the DSCR does not come in, but you're still able to do those loans. Even if you have, let's say, for instance, $1,000 a month $1,000 a month PITI payment. DSCR comes in at $900 a month. So now we have a 0.90 DSCR. We are still able to do the loan as long as you have over 700 credit score. We just have to lessen the LTV down to 70%, and you're able to do the loan as a DSCR below 1%. Then we have our no DSCR option, which is the one that this is the one that makes the loan, in my opinion, bulletproof, because the no DSCR option, as long as you've got over a 720 credit score and the LTV is 70 or less, let's say that same $1,000 a month payment doesn't, because the DSCR comes in at $600 a month. Now you can still do this loan as a no DSCR option, and still be able to close the loan under the DSCR loan.
Yeah, Jerry, those are great, and that, like you said, that's what makes this loan bulletproof. Is that ability to do that. Jerry, will we allow 1031 exchanges on this program too?
Absolutely.
Yeah,
absolutely. Yeah, we see it quite often with the 1031 exchange.
Yeah, and Jerry mentioned it when he went over the highlights about the LLC. Couple of things I always like to bring up about the LLC are, we've gotten exceptions. I've seen one where they'll go up to 3, but most of our guidelines state no more than 2 individuals. If there are 2 individuals, both individuals would have to be on the loan. And the other thing I like about the LLC is there's no seasoning on that LLC. So they could create a LLC 2 weeks ago and close on the deal tomorrow. So I like that a lot. Just looking at some other questions, Jerry. We just rolled this out, Jerry. It's an enhancement. How about gift funds? We talk about that first-time investor, but what about gift funds? Do we allow this?
Well, believe it or not, we do allow gift funds on the DSCR loan. It did just get rolled out about 6 months ago, but we allow gift funds as long as the borrower is bringing a minimum of 10% of their own funds. Then we allow them to utilize gift funds on this program.
Yeah, that's a pretty big, because you talk about being a debt advisor, being a wealth advisor. The quickest way to accumulate wealth in this country, we all know it, is through real estate. So if you maybe your parents or or someone close to you is wanting to get an investor on their way, they'll take, as long as that borrower has 10% of their own funds. Anything else, Jerry, regarding and Jerry, and I don't know if this changed, so I'm going to ask Jerry a question. So everyone just put earmuffs on for a minute. Jerry, do we qualify off the interest only? No, or do we?
We do.
Okay,
we absolutely do.
Didn't know.
Yeah. We will qualify you off of the DSCR will qualify off of the interest only payment. So that is a huge. I've had many loans where they're not qualifying just on the regular 30-year fix. We flip them over to an IO payment, and now they do qualify. So we do. And then one thing I like to mention, John, is that we do require reserves for the program, which is 6 months reserves. However, it's just for the subject property. So if the investor's got 10 properties, we're not going to require 6 months reserves for all 10 properties. It's just 6 months reserves for the subject property. So that, along with the interest only option, again, I'm calling it a bulletproof loan. But that is huge. It's only based off of the subject property.
Yeah, Jerry, and it was weird. I was just going to ask you that question about reserves, and then that takes me to my takes me to my next question about cash out can be used for reserves, right?
Yes, sir. Yes, sir. We can use the cash out funds in order to meet the reserve requirements. Absolutely.
So Jerry, a couple other things I'm looking at our matrices that help, help people. It might help you close one more loan. We allow a mortgage late in the last 24 months on this program too, right?
That is correct. We'll actually be able to go to as much as 2 mortgage lates in the last 12 months on the program.
Yes. So everyone, you really gotta, and that's what's great about Jerry and all the other account executives that we have, just in the state of Florida, which are probably the most seasoned. Call them. They know all this stuff. They'll help you close loans, and knowing that, like Jerry knows it off the top of his head. My God, it's going to help you close a loan where you may think, oh, they had a mortgage late, can't go traditional routes. This loan will help you grow your business, because we were talking a little bit before the call, we don't see rates coming down, for maybe a year. So you've got to create your own business. And this loan, if you know it and you work hand in hand with your account executive like Jerry, you're going to find these borrowers, I promise you. So Jerry, anything?
One thing, as far as one thing, for the mortgage late, it's 1 mortgage late in the last 12 months, not 2. For consumer credit, it's 2 late that we would allow in the last 12 months. Just wanted to clarify that.
Yeah, thank you for clarifying that, Jerry. But, and as Jerry, we do, working with Angel Oak, we'll do that pre-qual for you up front. So it's not, you're not putting your referral relationship with the realtor or with that borrower, you're not putting that up in jeopardy. We're going to basically, Jerry is doing a pre-underwrite on looking at the 1003 credit report. He knows those 2nd, 3rd, 4th, 5th questions to ask that could hang you up in the underwriting process. And Jerry, we refer to our A's as they're confessional booths. Tell them everything you know about this borrower, about this property, and they're going to try to make this deal happen for you. So, Jerry, anything else? We're talking about a pre-qual. We'll get to that in a minute. But anything else that you see a lot of, Jerry?
Yeah, one thing that we do see quite a bit of is business funds being utilized. As far as for the loan, they can utilize the business funds. We're gonna take the percentage from ownership in the business that they have, and we can utilize that amount. So do keep that in mind, because we do see that quite often for this program. We see quite a bit, because obviously these are large. Most times we have large investors with large business accounts that they're able to utilize those funds with.
Yeah. And Jackie's asking a question here. No, we don't take a second lien position on this, but we did. I'll do a shameless plug. We did just roll out second liens for full doc and bank statement borrowers. So, talk to Jerry, talk to your account executive. We just rolled that out about a week ago. So we're doing second liens. We're doing cash out second. They're closed. I'm sorry. They are closed end second liens. So, and maybe DSCR second lien somewhere down the road. So stay tuned. So Jerry, how long did it take you to do a pre-qual on this?
So a DSCR loan, I tend to always want to reach out to my broker when I receive the pre-qual. Just like you mentioned earlier, I want to know everything about the loan. I want to know everything as far as if there's anything that I need to know, I want to know up front, so that this way we can help you structure it and we can help you get the loan to the closing table. Typically a pre-qual, I'll have it turned around to you within 24 hours. Most of the times it's 24 hours. Most of the times it's same day. You send the pre-qual in that morning, you'll have it by early afternoon. But I would give your account executive 24 hours to do the pre-qual. Our pre-quals, we do a little more legwork than your standard pre-quals, just because most of the account executives here at Angel Oak are seasoned AEs that have been here for a long period of time. Between John and I, we got almost 20 years here with Angel Oak. Not to age ourselves a little bit, but and that's the case for most of our account executives. So we take our pre-quals to heart, like we really do. We want to make sure that when we issue a pre-qual, we are issuing our name behind it, knowing that that loan is going to close. So give your account executive 24 hours. If not, same day, they'll get that pre-qual right back over to you.
Yeah, and one thing, Jerry, we said earlier, 30% of loans we close don't meet our guidelines. If Jerry's not 100% sure, Jerry has resources available to him that he can rely on to get these exceptions, and these exceptions are done up front. So we're not saying, "Oh, just send it in. We'll get it done." We get a lot of this done up front, so it flies through underwriting. And Jerry, these loans, like you said, they're bulletproof and they're really easy to underwrite. I've seen from submission to close in less than 10 days. I mean, I would set expectations at 21 to 30 days, but I've seen them close really quick.
Oh yeah. I would say average turn times, at least for myself, are between 17 and 21 days. My top accounts that are familiar with our super simple system that we have will get these loans closed in 10 to 14 business days. No reason why you can't. A lot of times with these loans, we get transferred appraisals. So we'll get these loans that we're trying to go maybe the conventional route, and they were trying to close in the conventional world, and for whatever reason they weren't able to. So when they come to us, we'll actually accept that transferred appraisal, provided it was done by an AMC. We can utilize that appraisal. So you already have an appraisal. Now we may have to get the market rent analysis of 1007 on there, but once we have that on there and we're able to transfer that appraisal over to Angel Oak's name, we're able to utilize that appraisal. So these loans do close fairly quickly, and when you get your conditional approval, it's pretty standard. I mean, you provide all of the down payment funds, all of the reserves and the assets. It's a pretty traditional, just simple approval that comes out for these loans.
Yeah, and I hope I'm saying her name right, Jackie. They are recording this. This will be sent out. I don't know the timing. We can ask Linda near the end of this webinar. So let's keep things moving, Jerry. We talk about a pre-qual. We talk about pricing. Jerry, let's take the group through our quick call. So let me go. I'm going to go back to the homepage. So back up here, and again, everything we're doing, and Jerry mentioned it, simple, easy, everything we're doing here today is on our website, right? We have a resources page. This is, I just want to show our resources page. Jerry talked about an AMC. This is where our AMCs are. Everything is listed there. Anything you want to know or how to do with Angel Oak is on our resources page. So I'll go back to the home page. So you can get to do a quick quote and pricing two different ways, either here on the left side of our website or up here at the top is our non-QM quick quote. And once you click on that, it will pop up. Here we go. And most everyone in a relationship is with a broker. So first lien. Jerry, let's do a $500,000 loan amount, right? Credit score 740. Let's do a 70% on this. Subject property. We're not asking for your first Jerry. I've used your line since that. Jerry, tell me about your 8-year-old daughter. She might be 9 by now, but you said it about 4 or 5 months ago. So go ahead.
Well, let me take you back, John. This non-QM quick quote is about 50% of the reason why I took the job with Angel Oak over 7 years ago. Okay, I remember having to do pre-calls and grabbing the old school matrix and having to go through and take your quarter and take your quarter off and doing everything and having to do pre-calls that way, but way back in the day. But the non-QM quick quote is so user friendly that even my 8-year-old daughter loves to get on there and price out loans. She loves to just go on there and play with it and say, "Dad, this guy can get a 7.99 interest rate." I'm like, okay, that's awesome. It is very user friendly, like you mentioned. You do not need a user ID or password in order to utilize this tool. So that means you can get on there at any time without having a user ID or password. You can be on the phone with your realtor and you can jump on there, and within 15, 20 seconds, you can price them out a loan scenario. In this particular scenario, one thing that I will say is you do want to always put in the subject property state on there, and then you want to put whether or not you are licensed in that state, because we said these are business purpose loans. So therefore, that will let you know if you're able to, if you're not licensed in that state, able to still proceed with doing the loan. Once you get to the housing history, that's where you would put if you have any sort of mortgage late on there. If there's no mortgage late or anything on there, you obviously leave it on 0 times 30. Property type, we will actually go up to as high as 4 units on the DSCR loan. So keep that in mind, but we'll just leave this one on 1 unit. One thing we did not cover was the short-term rental, but we do allow short-term rentals on this loan, which is very, very popular in today's market. So keep that in mind. If it is short-term rental or not, just leave it. If it's not, then just leave it on no. Transaction type, this one, let's just say it's a purchase. Income documentation, this is the loan that you're going to want, the program you're going to want to select is the DSCR investor cash flow, okay? That is the loan program that you want to select. You do have the option to select your DSCR. I always tell my brokers, leave it at the 1 to 1.15 until we know exactly where the DSCR is, and let's just price out the loan utilizing, anticipating that the DSCR is going to come in from 1 to 1.5. It does have to be an investment property, so occupancy type must remain on investment. The rest is all standard. You want to leave it on U.S. citizen. Lock duration, always leave it on the 30-day. It does have a standard 3-year prepayment penalty. However, you can get a 4-year prepay, which will allow you to get a discount on the pricing if you do so. Otherwise, the standard prepay is a 3-year prepay. Escrow waiver, you can waive escrow depending on the credit score and the LTV. And then you do have the interest-only option, which we covered. Compensation type, here's where you would want to select whether you want to go 2 ways we can compensate you, which is borrower paid, meaning you're going to charge your fees on the front end, okay, or the lender paid, which means your fees will get charged on the rate that you provide to them. If you do go the lender paid option, then we have to compensate you for whatever your company has approved. So you'll want to know what that is. And then it's as simple as that. And right below, you're getting the program. You get the investor cash flow program. It does tell you requested a 70% LTV, but you can actually go to as high as 80%. So it's actually letting you know that. They've got an interest rate of 8.75. There's your bankruptcy seasoning for 48 months, housing event seasoning for 48 months, and there's your reserve requirements for 6 months. Once you get the pricing, all you simply do is go ahead and click there on the blue, John, where it says view rates. And we're just going to say, for the sake of this one, we're going to select the par pricing, which we see a lot in today's market with loans. So we're going to go select the par pricing for the 8.75. And then once you select that option, it's actually going to take you to step 2. Okay. Step 2 is where we would ask for you to either upload your MISMO 3.4. However, I will tell you, sometimes it's just simpler just to go ahead and click on next and go to step 3. Rather than uploading your MISMO 3.4, once you go to step 3, you're going to select your account executive on here. Okay, then you're going to fill out the company information. So you'll put all of your company information, loan officer information, LO email, and then the borrower's information. And then here, this is why I said just skip step 2, is because you're going to upload your 1003 here, your credit report here. Really and truly, we don't need a 1008 for this loan, so it's not required. If you want to upload it, you can. And then any additional documentation, I always tell my brokers to provide me asset statements and things of that nature when it comes to additional docs for this loan, just so I can review that on there. Then you've got your credit history. If there was any sort that you'd want to provide on there, a lot of times, if there is something, you'll see that it'll show up that it was 5 years ago, so we're able to still proceed or do anything with the loan. Any additional comments that you want to provide, borrower would like to close this loan under the name of an LLC, anything of that sort additionally that you would want to provide so that your account executive, when they get this pre-approval, are able to give you in their notes anything or additional documentation that may be needed according to your comments. And then you just simply submit that over to your account executive. And then, like we said, once you submit that to your account executive, they'll get that formal pre-qual And within 24 hours, they'll have that pre-qual once they review everything back over to you.
Yeah, as Jerry said, it's pretty simple process, right? It's just, you know, like he says, his 8-year-old daughter runs scenarios. That cracks me up every time. But you know, it's really easy. Like Jerry said, that goes directly to Jerry, you know, or whoever your account executive is. So, the last thing we want to cover here is I'm going to go back to the home pages, our marketing portal, and it's like Jerry said, you know, to run that scenario, you don't need login credentials, right? You don't, but to go to our marketing portal, you do need to be an approved broker with Angel Oak, and you have to have user access request credentials to access our website. So I'm just gonna click on here, click here to log in. Hold on. Okay. So, you know, we said we serve underserved borrowers, you know, as I keep saying, this is an underutilized marketing portal. One of our AEs says it's amazing how much Angel Oak invests in our brokers to help you grow your business. And, you know, we'll start here with just, you know, marketing flyers. These are already pre-canned marketing flyers. You don't have to, all you have to do is put in your contact information. So I'll look at, you know, I'll pull up, let's see, where is the investor cash flow? Again, we call this our investor cash flow program. It's a debt service coverage program, but you can see there's already someone who was in here filling this out for themselves. You can put your logo up here. You have your contact information. You can put your picture there. I've seen, and Jerry has seen this, loan officers and realtors co-brand these together. The great thing about this, you fill it out once, and this is an example of all the flyers we have here. So it pre-populates for every flyer that we have in our assortment, and there's probably about 24, 25 of these flyers out there. Take them, put them in an open house, do whatever. We've got them for we got them for bank statements, our DSCR, highlights, anything. So they're all here. Jerry, anything else to add to the flyers?
No, I mean, like you said, this is something that I would highly recommend all of you guys to utilize. You know, it's free of charge for you, and like you said, you can put all of your company information on there, and all that you're essentially utilizing Angel Oak is just your partner. It's your information, it's your flyer that's on there. And I will say that a lot of my top accounts utilize these forms or flyers, especially when they're doing presentations for realtors, CPAs, accountants, any sort of other leads that they're utilizing. They utilize these flyers, and it's great. I mean, it provides everything that you need for you on there.
Yeah, Jerry, you said you know, your top producing branches. It's amazing that they found a way to use these to their benefit. So the other part of our marketing portal that I really like also, and I'm starting to see a few more people start to use this, are our social media posts. So we'll do this again. I'll focus on our investor cash flow debt service coverage. We have them developed for Instagram or Pinterest, Facebook, LinkedIn, dedicated towards borrower. We have the content driven towards borrowers if you're looking for borrowers, or dedicated towards realtors if you're looking for realtors. So it's already here. All you have to do is copy and paste and start posting. I am telling you, you will get clicks and people will reach out. There's not enough people doing this. It's highly underutilized. I'm starting to see a little bit more, but Jerry said it earlier about the flyers. It doesn't say anything about Angel Oak. It's all about you and how we help you grow your business. We have whiteboard videos. I won't play one. They're only about a minute long. They're all about different scenarios, like the bank statement one. We went to get a loan and, you know, couldn't do it because he was self-employed and writes off everything on their taxes. It's really cute, innovative stuff. Presentations, I know Jerry does a lot of these. I'm involved in a lot still. I believe it's the most powerful presentation you can do. We usually do polls when we do webinars, and when we do these deep product dive, it's usually about 70% have not originated a non-QM loan in the last 12 months. Well, if you ask a realtor, do they know anything about non-QM loans? I bet you it's over 90%. And this is a great way for you to educate your referral source. And guess what? Someone like Jerry or your account executive will do this presentation on your behalf, and they won't say anything about Angel Oak. I know Linda, if we went in and presented for Linda, we would say, hey, we're just one of Linda's investors. That's all we'll say, but we're an expert on one of Linda's investors, and we'll talk and drive everything back towards Linda. So if you have a self-employed borrower, what are you going to refer them to? You're going to refer them to Linda, because Linda knows bank statement loans. If you have a seasoned investor, you're going to refer them to Linda, because Linda does debt service coverage ratio loans. So, you know, that's, again, take advantage of this. Take advantage of someone like Jerry, you know, who's a pro. You've seen it today. He's a pro's pro, and he will present this content on your behalf to realtors. And I bet you if you get 12 to 15 realtors in a room, you will get at least one of their loans. So, Jerry, anything else I've missed?
No, John, you did a really good job, and just you know, in today's market, I recommend everybody to utilize, especially these flyers are a great tool. Utilize any tool that you have available to you. We're definitely in a completely different market than we were 2 or 3 years ago. I do want to tell everybody a little joke that came in from one of my brokers that was sent over to me. And it just says, if you have a 2.9 mortgage locked in, I have one piece of advice for you. Refinancing at 8% right now. The higher rate will motivate you to grind harder, and you'll end up becoming much wealthier in the long run. So I don't know about that, but just something to keep in mind. We are in a challenging market right now, and loans like the investor cash flow is a loan that will help you to grow to expand your referral base. And working with Angel Oak is something that I would strongly encourage you. Like I said earlier, all of our AEs are seasoned AEs who have been here for a long period of time. We also have our non-agency department, which is if you have a unique scenario, we can always go to the non-agency department and get you an answer on something that may need an exception. Like John mentioned earlier, we have a huge percentage of loans here that are exception-driven loans. So I would encourage you, don't just think you can't do something because of the fact that, you know, just a quick example, you may have a borrower in New York who does not own a primary residence, okay? But they've been renting for the last 5 or 6 years in New York at a high market rent area, and they want to buy an investment property here in Florida. Well, we can absolutely do that for you, even though they don't own a primary residence. So you wouldn't know that otherwise. But otherwise, I encourage you guys to just, you know, try to.
Oh, we lost Jerry there. So
I think we lost him.
Yeah, but I want to, Linda, you know, I just want to say thank you, Jerry. Appreciate you taking your time and being the pro that you are. I'm honored to work with you every day. So I appreciate you, Jerry. Go ahead, Linda. We're our portion.
Wrapping up. Any other? Looks like there's a couple more questions there in the chat box that are just coming in. And while you're looking at those, we want to thank everyone for being on today. Yes, the recording will be sent out of this presentation, this amazing presentation, by the end of the week to everyone that's on board here today. Do you want to answer those questions, John, real quick?
Yeah, so I could only use this on investment property. I'm trying to see what the Carla's asking. I could only use this on investment property, primary. Jerry, I don't know if you're unmuted, Jerry. Our seconds, Jerry, we just rolled them out. They're on primary second homes also.
The second?
Yeah.
The second loans you're talking about? We can do them on primary second homes also, yes.
Okay, so no investors.
Okay. Yeah, and then as far as our brokers allowed to get loans for themselves, absolutely, you just can't originate the loan yourself. You have to have somebody in your office originate the loan for you.
I think my biggest takeaway was that, of course, the 30% of your loans do not meet Angel Oak guidelines. And I can tell you that in the QM world, that's not the case, right? So it's really, you know, we're all doing the best we can today with the market that we're dealing with. And this having a resource like Angel Oak is amazing with all these products that can be offered. We all have to look at it in a different light now. Things are not the same, and they will continue to change. And Angel Oak continues to change with the changes in our industry and our market. One last question, the HELOC, so you can do for primary or second homes, but not investment. Is that correct?
That's correct.
Okay, good. So for all of you, again, thank you so much for being here. We are continuing to do webinars as we move forward, as we end this year and we move forward to next year. If you're not, if you are an FAMP member, we thank you very much for supporting your industry and your association. If you're not, please consider to join, because these are the type of partners that we have that allow us to put on these wonderful webinars. So everyone had a great rest of the afternoon, and go Astros, or yay Astros, right? Or no,
Rangers. The Texas Rangers.
Whoops. Okay.
Yeah.
All right. Thank you, everyone.